All right, guys, quick update today. Derrick Evans here, NMLS 155010. And just wanted to go through a couple things. I decided to lock rates today. For those of you who don't know me, I focus on the VA home loan benefit, helping veterans buy homes, active duty service members buy homes, and refinance their homes. So I focus a lot of my content on that direction. But today I'm going to talk a little more macro market, why I decided to lock rates today. We're going to go through a couple things that are happening in the economy, and then we're going to go through what Zillow said about real estate values and to discuss whether or not that's relevant for us here in San Diego, or kind of get to the bottom of it, if you will. So let's look at mortgage rates. Oh, I better remove my lower third. Sorry, I'm a one-man band over here. All right, so what we got here is a very steady hand, as we've seen from the Fed, right? This is a nice channel that we've been in. However, the reason I locked today is because this here is a little risky. This is 100 basis points between here and here. So this was our current support level, which was breached today. We are now below that level, which means we've got 100 basis points of potential downside before the next level of support. Now, this may mean nothing. It could mean nothing because, hey, the Fed can come in at any point and just drop, $10 billion, $20 billion on this and bring us back. But if they're not in there in a big way, even if they're buying at the level that they've been buying at, we could still see a slow decline down towards this level of support, which for me, that 100 basis points is too much to give up right here because rates are so good. So I locked everything today. I don't have anything left to lock. I felt like this risk reward didn't make sense. The highest we've been since the Fed has gotten involved with the steady hand is right here. So really, not as much upside as downside. I don't like the fact that we closed today beneath this support level. So I am going to say, even though Barry didn't say this today, and Barry is smarter than me, let me make that very clear. I get these graphs from MBS Highway. Barry B runs that, and he is smarter than me. He didn't say lock today, but I'm going ahead and I locked. And I think people are happy with the rates that they got. Rates are still in really great shape. And these are all VA loans, but I think it makes sense to lock today and be very careful. Potentially rates getting worse. It could happen, unfortunately, because I feel like right now banks aren't giving us this upside. Even if the Fed stumps in and blows this up to here, we're not going to see that in pricing. Banks just aren't giving us that. They have a line out the door. They don't need to. But believe you me, if we lose this 100 basis points, you're going to see that affected. So I feel like our upside is really limited here. Our downside is exaggerated, and that is the reason why I pulled the trigger and locked loans for everyone who I had in the pipe today who did not have a locked loan. So we'll see. Who knows? Sometimes this is just about making a smart decision risk-reward wise. Does it make sense from a risk-reward standpoint to sit here and float? And sometimes it does. This time I don't think it does. So I made a move today. Stock market today was actually up really nicely the whole day. Gapped up, right? Took a nice gap up here and just kind of ran away for the day and was like, oh, we're going to go higher. Then Disney comes out in front. And this is how you know that computers are trading this stuff. Look at this. What is this? What is that? That is the computers. Everything stopped. So they stopped trading for a split second, or however long it was, 5 seconds, so they could wait to see what the news was right before this announcement is made. I think it was Disney's earnings that they were looking for. So whoever had the bid down here and some idiot who had a market sell order or whatever, they caught that right down here and created this weird looking graph. So you don't see this very often except for on Fed announcement days or days when a big company is reporting in a global pandemic and economic shutdown like today. So ultimately what was interesting about this, and the only reason I bring it up is because look where we closed. Right at the bottom of that. So this shows you that the computers are in charge. Terminator is here. We are all, the machines are running the stock market. So there's that. One thing that I thought was really good to see today was crude having another big day. And it was up much more than this right here. It resets at the end of the day because crude trades 24 hours, I'm pretty sure. And so, it resets, but it was up really nicely today. And you can see this is from since 6 a.m. yesterday. That's crude. So the reason that this is important and the reason that this is a good thing is because we really want crude to do what we need. We want to see oil going higher, even though I know it sounds bad. Would you want to pay more gas prices? No, nobody does. But we do want to see that going up because it's a good sign. It's a sign that activity is starting to, the truckers are starting to fire up their trucks, that, these aircraft carriers or whatever they're called, these huge the barges, these huge boats that carry all this stuff, that they're getting ready to fire things back up and the economy is about to turn back on. So that is a really good sign to see that. That's the expectation. That's where we're at. hopefully it'll be true. Those of you trading along with me in the USO, this did a reverse split, so no, we didn't go from $3 to 21. There was a reverse split there, but we're still up nicely, and it's starting to track again. What happened with this one was the fund had to pivot and switch their objective because their objective was getting murdered, and they were about to get taken out. And that's unfortunately what some of the big money, can do. And from a short position is that when you saw oil get to negative, remember when oil went to like zero? Made no sense, right? That's people with billions of dollars trying to bankrupt a fund called the USO. They tried to bankrupt them. They switched their initiative, and then when they switched their initiative, the people who were trying to bankrupt them went the other way, tried to bankrupt them that way, and so then they had to reorganize again. They had to do all these filings and stuff. So if you're playing along, with the USO trade, which I've traded this for oil for years, it's been my best trade, is back in business, not tracking 100% yet with oil, but getting close. So looking really good there. All right, so this is a big one. This is, I don't pay much attention to this person. She has no clue. But this actually came from Zillow. And, it says coronavirus will shrink U.S. home price by 2 to 3% nationally. Now, this is a forecast by Zillow. But deeper dive could be in store, is what they said. Now, the reason that we need to address things like this and not just say, it's hyperbole, it's the news, it's Diana Oler, she knows what she's doing, it's Zillow. They aren't really a real estate company. They're a lead generation company. They have no idea what's going on. And I think 2 to 3% isn't, that's not a terrible forecast. I mean, I could understand that. Remember, the key word here, nationally. So we have to, when we look at that, we have to take a look and go, well, how does that affect us? Because ultimately what's happening is you're seeing things shift a lot. So I've talked to some people who are working like New York real estate, some of the really specifically in New York, some of the metropolitan areas, talked to a couple of people in LA as well. Some of the really densely populated areas, you're seeing people sort of freak out and essentially fire sell. And this could affect the national numbers. If enough people in the higher price metropolitan areas decide to run for the suburbs, which there's a huge run for the suburbs right now in New York City and New York State actually, out of New York City, if you see that happen more and more, that can really affect prices because, a lot of those big ticket numbers will play a role. Ultimately, one of those homes selling is like 1,000 homes selling in my home state of Missouri, so it can make a very, very big difference. So I don't know. I don't necessarily agree that there's a deeper dive in store. I don't see where that's coming from. I think we would need sustained unemployment for a year or two. We really started to see the effects during the real estate crash of the unemployment that lasted over a year. Once it got past a year, things got bad. Remember, they extended the unemployment benefits to 99 weeks. During the crash, the Obama administration did that, which was what had to be done. But it was, those were some of the things that were happening. I think we're a long ways away from that. The amount of activity that I have seen has been bonkers. In fact, I can show you some stuff here in just a second. Let me pull it up before I show my screen, just to make sure that I have it. Greg will look at a little map here, and this is a great thing to use the website Redfin for. Among other things, looking at properties, but just so you to gauge the market. So could we see, 2 to 3% decline nationally? Probably. What does that mean for San Diego, though? And is this deeper dive that they're saying could be in store, is that something that is something that we should be looking at? Well, number one, if we're talking about, the San Diego marketplace, when you look at the nation, anytime if you were to break it down by county, they're getting you the national number. Okay, real estate went up 5% last year. They're giving you the entire nation. So if they're doing that, they're including every single county in the nation. They can't exclude any. If they say nationwide number, they have to include them, which means there's always going to be counties, no matter what kind of bull real estate market we're in, there's always going to be counties that have negative numbers. I do believe there's going to be some counties that have really big negative numbers because, like we're talking about, they're a metro area, or they're an overpriced area, or they're an area that people were already sort of kind of getting done with and being over with. There's certain places where prices have just gone up so much that they really do need to decline 5 or 10%. I don't see San Diego as being one of those areas. I think San Diego is going to be one of the areas that's positive. So even if Zillow's right and we're down 2 to 3% for the nation, most likely that will mean that there are a lot of counties that are negative, let's say 5, 10%. There's going to be some really bad ones, 25, 30%, whatever. There's going to be some really good ones. We could be one of the really good ones. I think we'll definitely be one of the good ones. We could be one of the really good ones. We could be up 10%. We could be up 15%. I don't think that that's impossible. We could certainly be up 5 or 6%, and no one would think that that was weird if the nation was down 2%. So I'm giving Zillow, I'm saying, hey, if Zillow's right, I still think we're up 5 to 6%. Now, that said, what they say on here about the deeper dive that could be in store, I think it's very important to understand the potential conflicts of interest that someone might have in making such a statement. And no, I can't draw or write very good with my mouse. But there's a conflict here because Zillow, although they are not doing anything right now, they buy homes, fix them up, and sell them. So there's a conflict in them saying and putting any kind of fear in the marketplace about prices could go lower because they stand to gain from that. So that's something you always have to look at when you get these, pieces of information. Is it a part of a broader strategy to try to suppress prices so that someone can make a profit? I don't know if that's true or not. All I know is that there is a conflict there. We need to be aware of it. We need to look at the actual activity that's taking place. Let me see if I can make this happen. I'm going to do something on the fly here. We're going to look at something. If I can make this happen, desktop, let's try iMac. Let's see if that works. And I'm in uncharted territory here. I've never tried this before, so let's just see if I get any luck. Nope, not working. Well, that's all right. I tried. So anyway, if you pull up just go to redfin.com, search San Diego, California, put in 475 to 700,000, okay, and 3 bedrooms. That's it. Those are your only search criteria. And then just look at the number of hot homes. The hot home index, which is what I call my little search that I do for the hot homes. You look and you see hot homes just everywhere, just painted with hot homes. Hot homes is a designation that Redfin gives to a home that they believe is going to sell very quickly. And they do that based on their own information, but I'm assuming that it's traffic, how many people are revisiting that home, how many people are looking at that home versus other homes in the area or in that price range or both. But they do a really good job of identifying homes that are going to sell quickly, that there's multiple offers on. I know whenever my clients are writing offers on hot homes, typically those are ones where there's multiple offers. So they do a very good job of figuring that out. As a result of that, we can take just a snapshot look and see, exactly, how many hot homes, how many homes out there are going to sell with multiple offers. And most likely, all those hot homes that you see on your search there are homes that are going to sell with multiple offers. And, you can go up higher in the price point. You can mess around with it and kind of see, okay, well, how many hot homes are there in the 1 to 2 million or 1 to 1.5 million? You can kind of look. It's a great way to use the free data that's available on Redfin to kind of see what's going on. So if my opinion here, 2 to 3% nationally, they could be right about that. They could be right. Don't see that for San Diego, though. San Diego's not going to see that. Not this year, anyway. Not with the momentum we have right now. Not with the economy about to reopen. Not with rates staying this low. Should they stay this low, which we all expect that they will based on the Fed's previous actions and their statements that they've made. Even if we see a little fluctuation up and down here and there, ultimately rates are still very low. And just the amount of the demand, the flat out number of buyers that we have is so much greater than the number of sellers. So the deeper dive that they're saying could be in store, I'm not a buyer of that idea. I don't think we have any of the metrics now. I think the administration is ahead of it. I think the government's ahead of it. I think the Fed is ahead of it. I don't see the deeper dive. I could be wrong. There might be markets that I'm unaware of in Iowa or Tennessee that might have a deeper dive, possibly. The market that I'm aware of, which is pretty much this under $750,000 San Diego marketplace, is on fire. Speaking of which, a lot of people ask me about ADUs. What do you do? How do you get an ADU? What are the rules? Where do I get money? How do I figure this all out? So I've actually got Kalani, who's going to be coming on. He's the guy who is the founder of ADU Geeks. He's actually founded other nonprofit charities, 12-year Marine Corps veteran. I'm going to bring him on early next week to discuss everything you need to know about ADUs. Not just ADUs, but also military transition. It's going to be really cool. He's a very cool guy, inspiring guy. and is right in the right place at the right time as far as I'm concerned about these ADUs, because people are asking me about them all the time. And he provides full consultative services to help people get their ADU projects put together, just A to Z. He knows everything about it. So we'll bring him on next week. If you have any questions about ADUs, shoot them over to me so we can ask him all the right questions when we have him on the program. So bottom line today, I'll just circle back to it one more time. I think that it's time to lock. I'll keep you posted on what happens with this whole action tomorrow. Hopefully the Fed is able to step in. Hopefully we do not see this. But I just think the risk reward makes sense. If this is all we could potentially gain, and we're seeing we closed beneath the support level, I don't like the way that looks. For me, it makes a lot of sense to lock, and that's why I emptied the magazine today on all of the locks. So thank you guys for checking this out. Hopefully it was helpful to you, or to your business, or to people who are in your sphere that you might share this with. If you feel this is useful and helpful, please share this video or shoot me a comment. I'd love to hear from you. And that is going to be it for today. I'll talk to you guys soon. Have a good one.